So 20x leverage is moving toward a more sane environment than 100x. But I mean, obviously, again, that kind of leverage is not consistent with the kind of the guardrails that should be in place for the average retail investor. And so having access to that, it's almost guaranteed you're going to get wrecked.
Hello, and welcome back to the Daily Crypto. Today we have Max Keiser as he tells us the drawback Bitcoin has amongst other cryptocurrencies and the difference between the past crypto market drawdowns and that of the present in terms of liquidity. Bitcoin achieved an all-time high of 19.1K in December 2017. Over the next year, it plummeted to a low of 3.2K, representing a maximum drawdown of 83%. So far, Bitcoin has dropped 73% from its all-time high in 2021. If it is of the same pattern as in 2017, it might go as low as 11.4K. Similarly, another 11 months of loss might be in store to match the 18-month bear market seen in 2018-2019. Without further ado, let us get right through the video. Remember to like and subscribe if you enjoy the stuff on this channel.
You know, for me, what I always talk about first, whenever I talk to people, is the quality of Bitcoin where it's unconfiscatable. So this is really unique in history. We've never had, as a species, the opportunity to have wealth that's absolutely unconfiscatable. And that resonates. That really, people like that idea. And the folks here who were unbanked, right? 70% of the country before Bitcoin was unbanked. Now 70% of the country is relatively banked, as they all have now the Chivo wallet and they have access to Bitcoin. So that was a flip, an incredible change. And people like that idea. People come up to me all the time in the street and they show me their phone and they go, I have $20. I'm like, wow, that's fucking awesome, dude. And they know that nobody can take that. This is theirs. It's unconfiscatable, and they can't be inflated away. It can't be taken from the government. It can't be stolen. It can't be extorted. And this is significant. The other thing is that it's uncensorable. So this is particularly key for remittances, right? So money going back and forth from El Salvador to the U.S., this money can go and nobody can stop it. Nobody can stop that transaction. It's uncensorable. So those two key points, I think, get into it. People, they get them over the hump. They're like, well, that sounds good. Let me try it. Let me download this. Let me get started.
The worldwide collateral market is estimated to be worth nearly $20 trillion in assets. Government bonds and cash-based securities are the most crucial components of a well-functioning collateral market. However, there is a rising vulnerability in this regard, since rehypothecation poses a systemic risk to the financial system as a whole. The rising reuse of collateral renders these assets far from risk-free and demonstrates the potential instability of financial markets, which is more fragile than many would like to accept. Bitcoin may become a significant component of the solution in the future, challenging the dominant collateral assets.
When the cross-collateralization issue that he's getting at is really the crisis du jour, I would say, because of what we saw with Terra, Luna, and all these other DeFi coins, that they're manufacturing that yield, pump from kind of cross-collateralizing and putting money to work into other DeFi coins, and these other DeFi coins are generating returns by creating coins out of thin air. So, by definition, that's a Ponzi scheme. So a lot of that DeFi return is just cross-collateralizing into new situations that are creating coins out of thin air and rewarding early, coin rewards, et cetera. Again, unregistered securities. So that's definitely an issue. And here, I think that this is definitely a regulatory issue where this definitely would require regulatory kind of enforcement. And you see these things, for example, with Luna, these guys are definitely getting into big trouble. I believe they're completely prevented from leaving South Korea. They're being held by the police. So, this is definitely an issue. So I think with that,
Max Keiser also weighed in on business executive Michael Saylor's take on the issue, with the 520 unregistered and unregulated exchanges that offer 20 times leverage, and how it would open its investors to massive losses. Listen to Max Keiser's take on it.
So 20x leverage is moving toward a more sane environment than 100x. But I mean, obviously, again, that kind of leverage is not consistent with the kind of the guardrails that should be in place for the average retail investor. And so having access to that, it's almost guaranteed you're going to get wrecked. It really turns platforms like Coinbase and others, that they become more like casinos. I've called them casinos before, unlicensed casinos. And so it has that element to it where you're really, you're putting up a penny and you're gambling on a 20x or a 30x. And as you know, that type of trading is almost guaranteed a loser. So I mean, he's right in terms of that kind of existence of as a casino operations going on. He's correct. Again, it opens the door toward regulators. So that would be the downside.
On June 9th, when El Salvador's Congress formally designated the world's leading cryptocurrency as legal tender, Bitcoin pioneer Max Keiser stated that a global Bitcoin standard is already forming worldwide. In September 2021, El Salvador became the first country to allow customers to utilize Bitcoin in all transactions alongside the US dollar. However, the International Monetary Fund, IMF, Executive Board recently asked El Salvador to reconsider its proposal to declare Bitcoin legal tender, owing to the financial risks and obligations that would be generated.
As you know, the country made Bitcoin legal tender a year ago, and they are experiencing all the benefits and changes that come with that. The economy is doing very well. They printed a 10% plus GDP gain. They're looking to do that or more this year. Tourism is up by a couple of $100 million. They just completed a surfing competition, international surfing competition that attracted people from all over the world. It brought in millions of dollars. They've got forward and direct investment coming in the billions of dollars. So that's all happening. That's very positive. Now, additionally, the government has decided to crack down on gangsters. So they have essentially arrested and incarcerated thousands of gangsters. And this also has a very beneficial impact on the economy. It's estimated that the gangs were extracting about $6 billion a year. And this is an economy in aggregate. I think it's like a $45 or $50 billion economy. So that's a lot. That's a big difference to this economy. It's like giving everybody a 25 to 30% tax break because they're not paying the extortion.
As its current value of $20,700, the Bitcoin price is trading at a roughly 11% discount to its realized price. It's also trading at a similar discount to its average mining cost. This could be perceived as an indication that the bottom might not be far. The more Bitcoin exchanges you can trust, the more people will be able to trade coins. Increasing the frequency and volume of transactions helps improve liquidity. Some people hold Bitcoin outside the exchange. As popular exchanges become more secure, many of these holders are willing to trade Bitcoin, adding buyers and sellers. According to Max Keiser, the difference between the past crypto market drawdowns and that of the present is that the market lacked liquidity in the past. Increasing Bitcoin acceptance in physical stores, online stores, and other businesses can improve the user experience and reduce volatility. The more you use it as a medium of exchange, the more fluid Bitcoin will be. Retail acceptance has increased, but high speculative demand has eroded the supply available for transactions.
Different here is that over the past, let's call it the Michael Saylor era of the past several years, the volume has become legitimate and the demand is legitimate. And so the markets are legitimate. But the issue here would be the layering on top of this market of these derivatives or DeFi and cross-collateralization. So that's created an obstacle for good price discovery. So that would be the difference. But the net effect is the same. People always, of course, ask me and ask you and ask others for price predictions. And it's an incredibly volatile asset. So it really is, incredibly difficult to make a price direction other than just that prediction, other than to say that what I've been saying for 11 years, I'll tell you the direction of Bitcoin. It's up. If you hold it for 3 or maybe 3.5 years, anyone who's held it for 3.5 years or 4 years is in the black, right? So if you've got a time frame of, which is not a long time frame, 3.5, 4 years, you're going to be in the black.
In the United States, the attitude toward cryptocurrencies as an investment has altered dramatically in recent years. As a result, people are becoming more aware of cryptocurrency investing and trade, with acceptance rates growing yearly. Around 16% of Americans have invested in or traded in cryptocurrencies, according to Pew Research Center. Between 2018 and 2019, crypto ownership in the United States more than quadrupled. The majority of people held either Bitcoin or Ethereum. Bitcoin, Ethereum, Tether, Shiba Inu, and Dogecoin are among the most popular cryptocurrencies among Americans. When Bitcoin prices reached an all-time high in the fourth quarter of 2021, the number of Americans investing in cryptocurrencies increased exponentially. According to data from the crypto research firm Chain Analysis, crypto usage in the United States is at 14%. The United States was placed 8 out of 154 countries in the poll. The US scored 6th in the previous report, indicating a global boom in crypto use. The United States is a hub for crypto-related businesses. Major corporations and startups such as crypto suppliers Coinbase and Kraken have popped up, allowing Americans to acquire cryptos fast. Some states have also passed legislation encouraging the usage of cryptocurrency, which has increased adoption rates. Arizona politicians, for example, have advocated legalizing cryptocurrency tax payments.
The United States. So I would suggest to Michael Saylor that he take his message to overseas. Take your yacht and sail to countries where Bitcoin is adopted and the learning curve is rapid because there's a real need for it. Throw America under the bus for now because they're just mired in too much other stuff. These other countries, however, it's where it's happening faster because the need is clear and the asset is performing brilliantly for these millions of people and soon to be 1 billion people and more.
Max Keiser also weighed in on business executive Michael Saylor's acceptance of stablecoin being controlled by certain regulatory bodies. According to Max Keiser, stablecoins being controlled by such regulatory bodies will defeat the purpose of Bitcoin. Are you on the no side of regulatory bodies being in control of cryptocurrency, just like other digital assets? Also, how do you see it affecting its global adoption if the regulatory bodies gain control of the coins? Comment down below and don't forget to like and subscribe. This is The Daily Crypto. We'll see you in the next video.